Uh, Trust your day is fine. I've been fine. Was fine. Let me quickly do a rundown analysis of this here, this particular trade, and why I took it. So, as a trader, when you want to take a trade, when you open your chart, the first thing is to go on the higher time frame. You know, some people go start from the monthly time frame to do the overall bias. Like, okay, what is the overall bias of the money time frame? So they are bullish on the money time frame of this trade. They are bullish on it. It's going bullish. So you can say that it's a bullish time frame. I mean, it's a bullish momentum, and the bullish candlestick. I mean, is it looks like it's moving up soon to that other block, to that other block. That means that possibly expect more downward move as the market goes. But let's leave that to that. So that's the monthly bias, and you can see that overall it has been an uptrend, and this could serve as a retracement and maybe a continuation to the buy side. I mean, for the last month and this month, market has been bearish and bullish rather. So, well, this is just to keep at the back of your mind. You are going to um, necessarily other now analyze with them. Okay, all right. So then you can go to the weekly time. Now, I used to skip all this stuff, but for people that the reason why I don't want to skip it because for people that want to be a swing trader, remember, swing traders are people that hold trades for a longer period of time. So if you want to hold your trade for a longer period of time, that means that you have to analyze from high time frames. And what that does for you when you analyze from high time frames is that it tells you to then you reduce your risk though. It helps you to be able to, that means you want to hold trade for longer time, a week, 2 weeks, 3 weeks, 4 weeks, 2 months, and all that. So that's the way I used to trade before. But you know, you should have to, if you want to do that, you should have a scalp account too. I don't advise that you become a swing trader even as a beginner. If not, you get frustrated out of the market because you'll not be making profit fast, So weekly time frame also, well, the momentum is changing on the weekly time frame, and it looks like it's reacting to this zone here. It looks simpler here. The zone looks better here, and looks like it's reacting on to this one. So you can see here, it's reacting to that zone, and it's already bearish already from last week to this week. It's been bearish now. Bearish now. Yeah, then you come to daily time. All this is just to help you. So if you want to, for people that are looking to be a long time store, you can to be a swing trader. You want to be trading from zone to zone. Use your 1 month to identify your zone, your BFI footprint, and then use your 4 hour to do for entries. Okay, but if you are the one that are scalping, for people that want to scalp, when I mean scalp, you do intra trading, you trade within the day. See, look at this daily time frame. It's still in zone, the weekly time frame, right? And the market has rejected at that zone, and it's becoming bearish, still coming down, right? So for those of you that you are interested in what's it called now, in swinging, that you have to look out for your entries on your zones on Monday time, right? And then you come to the 4 hour to do for entries. But those of you that want to just scalp, do intraday trading, I advise that you come to look for your zones on the 4 hour time frame. 4 hour time frame is always better for you to identify your zone, which is where I always start my own trade from. Okay, I start my trade from the 4 hour time frame to identify important zones. Now, this time frame, I think this zone was drawn, I think on the daily now, just now daily. And as you can see, it respected, and then market got into it and sold off. It sold off very well, at least few pips. If you are trading zone to zone, it sold off 27 pips, not a bad one though, but before rejected and went up again. It looks like a fake out. It did for me, it did me almost 30 yesterday, but I was able to recover. So now all you need to do is to come to the forward time to look for your zones, because you are trading from zones to, you want to be trading from zones to zone. Okay, you want to be trading from zones to zone. So what are we, what can we see here? Well, I can't see anything here right now. This is not a bullish other block. The only other block that is here, this is the only other block that is here. Understand? And that is why my TP is around here, so that by the time I can set a buy limit here, and I be a buy limit, I set a buy limit so around here. I set a buy limit here, which has activated. If I set it, it would have activated and it's already running, already buying, and then my stop loss is going to be below. Now, this candle is the other block. The candle before, don't forget the other block. The candle, the last candle that printed before the continuation is the other block. So this is the other block. It's a bullish other block. Yeah. Now, I told you another block, you can combine two candles together. Now, this is an engulfing. Other blocks are simply engulfing candlesticks. So you can see that this candle engulfed this one. So this is the bullish momentum. So this other candle is what the other block is. You understand? So from the body, from the opening here, then to the wick here. That is where your stop loss is going to be. Stop loss is going to be below here, not the wick of this one. Can you see? It's going to be here. It's going to be here. Can you see? And then if you are setting limits, you set limits or you take entries from here. This is another block. So this is a bearish other block. Can you see this candle? So the last candle. This if you combine this candle alone actually engulf the candle and the wick engulf this body. But we combine these two together, it's a good other block. And that was why that place gave us a good zone. So this is our this is going to be our other block. And as you can see, market came into that zone. So this is a forward major zone that you will have identified on your major on your 4 hour time frame. And then after you identify it, all you need to do is to just go to your smaller time frame, to your 15-minute time frame, to look for good entries. So when you're using 4 hours as a major zone, you use 15 minutes for your entries. Use 15 minutes for entries. Now, let me also show you. So we now come to 1 hour time frame. The whole thing is going to look simpler, and you can now, if you are entering your trade on 1 hour time, there's going to be more. You are going to be exposing your risk is going to be more. You understand? You are going to be the risk is going to be more. This is let's say you are setting your buy limit. You are risking 21 pips. That's a lot of pips, but which is not also a lot depending on where you're entering from. So sometimes you can just play around 30 minutes or 1 hour to see if you can how do I call it now? If you can find a better zone. So 1 hour. You have seen your zone already on 15 minutes on 4. You have identified this is your zone, obviously, and it captures here too on the 4 hour time. But looking at this, let me delete the whole zone. Let me delete this whole place. Now, looking at this, can you see here? Other blocks. So most other block is your indicator for entry. So sometimes when you are trading and you need an indicator for entering a trade, other blocks are good indicators for you to enter your trade. Other blocks, I'm sure that you guys, I've taught you guys other blocks. I shared with you last time, engulfing. Those that don't have, I'm going to share with you, but you must have encountered it before. This is an order block here. So this looks like a valid zone. Now, can you see here? Don't forget this point. Excuse me, sorry. So for some people might, because we are looking for a sell, that if market gets to this point, this is an order, this is an active BFI footprint, it's a good zone. Now I'm expecting market to come back here also again. Can you see that there's another block here too? Market gets back here too. We set the trap for it, and then we'll wait for market to set the trap for it. This is a good zone. This is a zone. Okay, and my stop loss is going to be somewhere above there. If market gets back to this point, to this zone also, you're going to expect it to sell more. Okay, now this is what I mean by trading from zone to zone. Now there is another block here also, which is what this market is reacting to. This is another block here. This candle, can you see this candle? The wick and the body is engulfing this red candle. So, but if you are not satisfied with that enough, these two bluish candle, green candle, combine together to make one, engulf this point. So you can still pick here. You can pick this candle, even though you didn't pick your order, you didn't pick our order. You can pick this candle as your order block. But if you go to my time frame, you will see. Let's go to 4 hour time frame. Let's see if we can find. You can really put our zone. But I advise that you find your zone on higher time frames. Okay, now see where it brought us into. But on 4 hours time frame, this is actually where the zone is. On the body, can you see? So when I talk about you trading from zone to zone, this is what I mean. So the stop loss is going to be here on 4 hour time frame because of that other block. And look at the way it triggered it. It came into the zone and is now buying up again. It's now buying up again. You get what I'm saying? So so that's why you work with all this time to look for potential entries. Now, where we see this other block was on 1 hour time frame. We saw this one, this other block here. We saw this area here. We are going to enter from the body, on the opening of that body to this point. And then see, it broke into it. In fact, I was scared because it was almost touching my stop loss. But to be safe, I used to extend my stop up here. To be safe, I don't use that body. I extend it to if there's a wick to the upper wick, because every wick is very long. To be safe, I do it. So sometimes when you are trading, you are not going to be spoon-fed with everything. There are things that you also have to learn yourself. You have to identify yourself. You have to just know them for yourself, because nobody is going to spoon-feed you. You get what I'm saying, right? So, and look at it now. When it got there, it reacted to it on this 1 hour time and started selling. Now, this is a zone. This is a BFI footprint. It's called a BFI footprint. The zone. Now, look at it. It came into this zone also, activated, and is now buying. By now, I'm sure it must have bought up to 10 pips, 6 pips. Not a bad one. You get what I'm saying? So it's buying from. So you can take your trade from zone to zone, and it is still respecting this our other block here. Just that it would have given us. It might not have. If we have taken this zone from here, we might not have touched our other block. But I still have a feeling the market is still going to come back into this zone. Okay. And look at this first zone. Look at this first zone here that was there. There was an initial zone here. This was our first other block here. The market tested it. Market tested it here, came into it, and then move up. You understand? And then moved up. So if we go on smaller time frame now, 15-minute time frame, that's when I just draw. We realize that it has broken some previous lows. It has broken some previous lows. Can you see? Can you see that? Can you see this now? Now, this was where it entered from. Now, why market was doing all of this? This was a previous low. this low was taken out. This particular low here, this their swing points, swing point, lower highs, lower low, higher highs, higher low. That's what we call areas of liquidity or swing point or mid swing. Liquidity is way deeper than that, but that is what you should pay attention to. All those swing guys. Those the market, did that trade, did you take out those swing guys? Now it took out this particular swing guy, came back. Now, what is the origin of the swing guy? What originated this? Okay, let's even take all those serious. Now, this broke it. Now, this was the zone that originated. This was the area. See, this other block was what originated this. Was what originated this move upward. This particular other block there. Can you see it, guys? This particular other block, because it was one that originated this movement that cleared this previous swing high. This small area is your swing high. Higher high, higher low, right? Market has been moving up. Higher high, right? Higher low, higher, another new high, then another low. Pick the other here. Now, these are the market moves. High, low, you understand? Another new high, you understand? Now, market came back to that zone again, to that point origin, because this was the origin that initiated this movement that cleared these previous highs. Don't forget, it must clear previous highs. Okay, at least 2 to 3 previous highs. Now this was the origin. So market came back into that origin, created another, and then moved up. Now a new swing point has been broken, which is here. I don't know if you guys are seeing what I'm explaining. If you are getting what I'm explaining to you, you are seeing it, please say I. Type I in the comment section. Now a new swing high has been broken. Now this is the origin of that swing high. This is the origin of that swing high. So we are going to wait for market to come back into that zone again in the future. This was the origin that initiated the movement, which was another block. So look at how the market moved again. Did another swing high. Did a swing high, yeah, to clear it out, but it didn't come back into the zone again. It didn't come back into the originator zone that originated that movement that cleared that previous high. So market didn't come back there. It just kept on. Now it kept on and clear this swing point too again. Then cleared the swing point and then moved up. Now market now came back into this place. It came back to this point, to this zone that originated the move, came back into it and bought a little bit. Now sometimes, and then it bought down here and took out, so like if you have entered and stop loss was just like this other block, which are taking you out. But if you made it open more like this, you would have still survived. But the problem is this now, most of the time, see, don't get scared of being taken out of the trade. It's one of the things I wanted to talk about, psychology and risk management. And maybe in the next video, maybe when this, or I should just talk about it here also. You don't get scared of losing. Okay, that is why you have to work on your risk management properly. If you have an $100 account, you don't go and start using 0.03, 0.04, 0.05. You should use 0.01, 0. The highest lot you should use is 0.02, 0.02 lot size. And if you are going to open a position, just don't open more than 2 to 3 positions. In fact, just open 2 first. That is how to. The profit might not be much or high. It's because of your capital. Don't try to flip account. There's a level you can get to that you can try to flip accounts, and you have to, and it's going to be in your mind. It's going to be in your mind that, what I mean is you have reached a level actually in trading before you can try all of that. It's because you have reached a level in trading, and then you have the mind. Maybe the $100 is something you can afford to lose. You understand? So don't try and go all in and expect the market to go in your direction. That is the first manipulation, emotional manipulation in the market that happens. Don't try and go all in and think market is going to just automatically go in your direction. It might not go in your direction. So now look at what market did here. It came back into our major zone. It came back into our major zone here, and then started going up. It went up to that point. Now, when it got to this zone, that this is a BFI footprint, is an order zone, order flow zone. That means that there are orders here. You understand? And there are others. There are others here also. These two candles engulfed now. So what you need to do is just wait for market to get back into those zones. You understand? Now look at this. Now market has moved. Market has moved. It moved again. You know, then it didn't continue up. It came down to this zone. Because there's another flow zone here to pick more orders. Now I picked it, and now it's going up. It's doing up, down. It's doing swing low and swing high. It's moving up. It's clearing. It's clearing those highs. Now look at something. Look at this previous high. Look at this previous high that was taken out. This one was taken out, right? What was the zone that initiated the taking out of the zone? This was the zone that this was the area. This is a 15-minute time frame, guys, right? So you know, this was the area. This was the zone. Actually, this was the area that initiated it, and you can see when market got there, it triggered it and went up a little bit. Okay, maybe it might not be enough before it started retracing back downward. So it was just it didn't even show much of a zone here. There was nothing really serious. No other block. The other block here is you can't call it. It's too small. No, there's not much information there for us that we could have used to even call it our other block. You understand? So look at the market moved up, and then the moment it sold, the moment it got to this other zone. Now, if it hits your stop loss, fine. Don't try and revenge the market. Wait for another opportunity. You are not going to be right all the time. You're not going to be profitable all the time. I don't need to tell you that. Something you need to understand. As much as you can make good profit in the market, you can lose it all too. So what you need to do is to learn and understand, know when to leave the market. Sometimes not trading is even trading itself. Don't try and revenge the market because you are taking a loss. Evaluate why you're taking the loss, why the loss happened. Okay, market is not going to always go in your direction. Market is never going to always go in your directions. There are days that market will not go in your directions, that you hit your stop loss. And don't forget to always set your stop loss. Your stop loss is what will make you not go back to the trenches. Remember to always set stop loss. Now, and when I say your stop loss, if it is wide, if your stop loss, you can calculate, you can go to BB Pips and look for what's it called? Pips calculator or percentage calculator on how to calculate your stuff, how much you are risking. So if you are entering your trade, check your stop loss, calculate it in your head, know how much you are willing to lose, know how much that you are going to lose if you use that lot size. If you use 0.1 lot size, that is $1 per pip per trade, and your stop loss is 10 pip stop loss. That means that if the stop loss hits, you are going to be losing $10. If it is 20 pips that your stop loss is, that means that if the stop loss, you are going to be losing $20. Okay, right? So that's why you have to put all this in your mind, and then you know what you are willing to risk, you know what you are willing to do for you to trade. Now, this kind of trade now, this current trade now, is not good or advisable for you to enter a trade in the middle of it. You have missed the entry. It is not good for you. You have missed it. Don't trade in the middle. Always trade from zone to zone, from footprint to footprint. If you have missed the initial entry from the zone where the zone is being activated officially, then let the trade go. Don't come and enter a trade here because it's buying now. Now want to join the buy. The chances are that this trade might get to this area, and continues itself. Okay, so imagine you now go and buy, you just discover that you're on a long thing. You're on a long thing. Okay, so don't trade from the middle. Don't trade from the middle. Trade from zone to zone. Trade from where there is obvious things to trade. And one of the things that will make the trade obvious for you is trading other blocks. Trading you can use other block as. So if you can't find the other block on your time frame that you are on, go to other time frames. Sometimes it can even be on your 5-minute time frame to find the other blocks. You must find an institutional reference point, which is either another block, which is either another block, which is an engulfing candle, The other block is an engulfing candle. You need to know that at the back of your mind, and you need to always use it. Other block is an engulfing candle. The other block is an engulfing candle. The other block is an engulfing candle. You can combine two candles to make it one. If it is like this now, I can combine this red together. If I feel like this is not this already engulfed it, but it wasn't enough. But it give us another long candle. So just combine together in your head, making one. So this is a good engulfing candle. Can you see it now? And the market got there and rejected, and so that's your other block. So the last candle, this is your bullish candle, because it's a bearish candle. The last bullish, don't forget, your other block is not the bearish. It's not the bearish candle that has formed the bearish and go other block. It is your last bullish candle. That bullish candle that has formed, the last one is the other block. So that is what you're going to set. Used to pick your entry, to set entry and stop loss, And sometimes just use your initiative. This is forex. It's a business. It is not everything that we are going to tell you, or that we are going to learn from me or from any teacher. There are some things that with your regular experience with the market, you are going to learn them yourself. You are going to have to find them out by yourself. You understand what I'm saying? So look at the market now. Market now got there. It almost hit my stop loss, and then before it look at the way it now continues selling, it sold and did some nice pips. If I was the one, I would have left the market since when it dropped all this drop. I would have left the market when it has done all this drop. I would have left the market and then pick my stop and move out of the market. You get what I'm saying? So except if I might have break even. So sometimes now, when the market has moved very well for you, learn to break even or take some. If you are using one lot size, you can take partial. Taking partial means that doing as if you wanted to close the trade. Those of you that don't know, when you click on that button that do as if you want to close the trade, it will take you back to the marketplace where you enter the trade. Just go and edit. When you are in profit, you can edit your stop loss. Your lot size. So just go and edit your lot size. Just type the one you want to remove. If you are using one lot size and you want to remove, you want to take 60% of the profit, just type 0.6. You understand? Or you want to take half of it, half of the profit, just type 0.50 and close in profit. So that 0.50 is going to close in profit for you. That's only amount you have. That's the amount you are taking away from that point. You get what I'm saying now? That's the amount you are taking away from that point. You get what I'm saying now? So learn to take it. Take some. If you are using big lots, or you are trading from account, take some profit. Take some break even. Break even means that you set your stop loss, you remove your stop loss from wherever you have set it, then you set your stop loss at the place you entered. So this is where I enter from, right? So assuming I enter from 115.668, I'll bring my stop loss to that place. What I used to do is that I set it like 2 pips lower so that it doesn't close in small loss because of spread, so that it can close in break even 0.00 or close in 0 something for me, or you understand what I'm saying? So that is all about that, about looking for zone to zone. So I'm going to pick one more. So as I was talking about the psychology part of trading, I want you guys to understand that you don't have to trade all the time. Know when to trade and know when not to trade. Okay. Sometimes some of you need to, you should know. Sometimes you can just decide to trade a particular session. You can decide to trade London session from 8 a.m. to 12 p.m. That is when the market moves the most. That is where 8 a.m. to 12 p.m. is when the most volume of the market is being traded. So you don't have to be on your chart all the time. You don't have to. If don't force a trade to happen. Okay, don't force a trade to happen. If the trade is not coming, don't force the trade. Right? Don't force a trade to happen. Just let the trade flow until you see what you are looking for. What are the parameters you are looking for? Is it at a zone? Is it inside a zone? Is the market coming to a zone? If it has not gotten to a zone, wait. Don't just say that. You don't just jump in and hope that it will go in your favor. Wait, see, when you take trade from the right place, when you take trade with the right mindset, with all your criteria, all your factors in place, you can leave that trade and go to sleep because you have set your stop loss and everything. You can leave that trade. It is only when you take trades that from the middle of nowhere, that is when you are stuck to your chart. You are trying to look for They are now praying that the miracle happens. Then somebody will now come in and say, Olubori, please, can you help me to check the daily time frame? What is happening there? Can you help me to check what 4 hours happening? What's happening? Can you help me to check Euro USD? What's happening there? Because that means that person has taken a wrong trade, and they are not sure about it, or they have used a legal lot size and the trade is already against them. Legal lot size is using a lot size above that is bigger than your account. Don't be greedy of profits. Before you know it, the small $1, $2 you are doing, before you know it, within a short period of time, should have grown to something. Okay, and that is the major manipulation in the market. Greed, the greed factor. You have to learn to overcome greed. You are as a trader. If you are greedy, you may not be able to end up being profitable. Profitability is important, and accepting your loss is also very, very important. You must learn and be ready to always accept your loss. You may not always be in profit. It's not even me. You can't always be in profit. There are days you will lose. There are days of losing. You will not always be in profit. And then you must learn to accept that. Accept that. You have to accept that. You have to learn to accept that as a trader, that, okay, I'm not going to be in profit all the time. I'm not going to be in profit all day. So what do? You learn to accept your loss. When you make losses, sometimes you can just take a break for the day. Okay, or look at other peers, other stocks, and then analyze again. Remember, trade from zone to zone. If you're using a phone, don't trade by just looking at your phone horizontally. You can turn your phone around into a landscape so that you can see the chart clearer. You can see what is from this corner, what is not from this corner. You get what I'm saying now? So one of the things you need to find out is that, is it in a zone? Is it in my zone? Is there a BFI footprint there? Now, a BFI footprint is an engulfing pattern. Is an engulfing candlestick. And if you notice engulfing candlestick, realize that engulfing candlesticks, there is something they have in common. They are always getting respected wherever they are very active. You understand? Now let me show you one engulfing candle that is here, that we can relate what I'm talking about. Okay, because engulfing candles, they stand as other blocks. Engulfing candles, either bullish engulfing or bearish engulfing. Anywhere you see them. Now look at this engulfing candlestick now. This engulfing candlestick gave us nice entry. This other block. This is another block, right? This is another block. So now this is a major zone. I told you about major zones and minor zones. Yeah, if you have found the major zone on the 4 hours, then there's going to be some zone. Those minor zones sometimes are the retracements, no market is moving up like this, you get up like this. No, let me use it down trend. The market is coming down like this. Can you see? Now these areas are called swing points. So if we see a major zone here, now these swing points that are happening in this area can be our minor zones, whereby we can look out for potential entries. And at these zones, when markets get back there to those places in the future, you get what I'm saying? At these zones, what you're looking for is institutional reference point. You're looking for, is there another block? Is there another block there? That's a bearish or bullish engulfing candlestick. But your best bet and your most safe zone to enter from is the originator of the movement, is the origin of the zone. You enter from a safe zone, which is the origin of the zone. You understand? So you might come back to this zone, to this now. The closer they are to the original zone, the better they are. So all you can only just pick two zones after them. The rest, ignore them. So after the original zone, if you see another swing point here, you can take them as a zone. Okay. So if market comes to this point in the future, you can try and look for a sell opportunity. Okay. If market comes back to this one too in the future again, you can try and look for a sell opportunity. But anything else aside from that, the zone it might not be valid again, and it would have become weaker. You get what I'm saying now? Now look at this other block here. That is why if you are scalping, you don't stay too long trying to scalp. No. Don't stay too long trying to scalp. Now, it didn't. This limit didn't get activated. This limit didn't get activated for some reasons. But if you check it on other time frame, like 5 minute time frame now, this would have given us an entry from here. Combining these two candles, this could have given us an entry from there. Now it activated it and it sold. You understand? But it's a minor zone. It might not really hold compared to this zone and this zone. The reason why this zone is holding is because it's closer to the major zone. So this is just a minor zone. This is a minor zone too. Market came back there to retrace to continue the downward movement. So always look at this. This is not the major zone actually. This is two major. This is a minor zone and a minor zone. The major zone is still somewhere upward. Now this is the major zone here. Can you guys see our major zone here? This is our major zone here, and as you can see, the market came to originate from here, and then it came into the zone. It came into the zone, and then now there's something we call the deeper half of our zone. I think I'm going to talk about that in the next video now. And so I'm going to end this meeting now. So I'll send a new link. You guys should join. All right. So I'm going to send a new link. Can you see that the market is already selling? Like I said in my overlay sale, see the way it's already selling down again because it's creating a swing point. Dropped higher highs, lower highs, lower low, lower high, then lower low, and then it might still come back into our zone again. If it doesn't come into this zone, I am expecting it in this zone, this particular one here. This one, my stop loss is going to be somewhere around here. So I'm expecting it. Then if it happens, then I can take a buy entry from there. And if it doesn't happen, now is that a major zone? You have to go and look for it on our 4 hour time frame to look for our zone to zone. So what do we have on the 4 hour time frame? Do we have anything on 4 hour time frame? Well, it doesn't look like there's anything there. It doesn't appear like a zone to us, and there's nothing there's no reference point here. This pin back would have been a reference point, and which it did actually. That was what I told you, that another block, this other block motivated the movement up. This is another block actually. So there's still a zone here. So if the market comes back into this zone, we might expect the market to move on. All right, guys, this is going to end now. I'm going to send a new link now. Thank you, guys.